Hi folks, this is Anne Marie. Today is Tuesday, November the 12th, 2013, and we've come off a day of very sideways and quiet action. We are looking at the moving averages here. My thought is the following. Anything up above 177.67 looks like it's going to be upside momentum. Target actions maybe $1 away. This is not an ideal formation for an expansion event. It just doesn't look like that from a momentum perspective. So if you are looking at new breakaway spaces, I urge you to use caution as you approach frontline targets to make sure that they hold. Trade level to level, right? 177.67 to 177.97 to 178.40-ish looks like the range. Notice momentum is still in our favor to the upside as far as the 4-hour chart goes, as the distances between the 200 and the 50 continue to climb. Sideways action here, though, tells me that we are trying to coil up with that 50 eventually, going to get into the space. Momentum flattening out could still be upside, but momentum does not look like this. If it is breaking out into a new stretch, it looks like this. And so we do not have a formation looking like this. We have a formation looking like this over here to the right. So you want to be extremely careful. Let's move into the hourly. We're just going to take a look at SPY today. Not enough time to take care of everything else. But we've got a flat 50. We've got a flat monthly VWAP. The daily VWAP, of course, flat after yesterday, and that moving average that we watched, the 8, also very tightly bound in there. A lot of things going on. We could get very, very choppy. If we lose this frontline squeeze of 177.10, we will come back into the pivot of the prior day around 176.53. Going to move sideways as long as we've got that range that gives us flattening action. Notice on this formation, we've got the 50 and the 200 getting closer together. Look at the SMIs. Very, very, very low momentum. And that comes, of course, from the type of formation that we are looking at right now. So what's the bottom line? Use caution, right? Not a ton of volatility sitting around in the market space, that's for sure. But if you're looking at short-term trading events with these dips and complete reversals, right? V-shaped reversals. They might be small V-shapes, but they are Vs and Us nevertheless. That means that we are not in a trending space. Do not anticipate that this all of a sudden is telling you that it's breaking to the upside or all of a sudden telling you that it's breaking to the downside. There is no definitive evidence saying that this market has resolved in one direction or another. And what that means is we trade shorter term, we trade tighter time frames, and what we do is we wait for the breaks, we take them into targets, and we get out. We are not looking for the mother lode here. We are looking for small dribbles up the first. All right? So, take care. Good luck trading.